Good day, everyone, and welcome to our webinar on the Odoo accounting module. So, in this session, we'll take a closer look at how Odoo simplifies financial management and helps businesses handle their accounting processes with greater accuracy and control. So, we'll give it a moment for a few more attendees to join before we begin. All right. So, throughout this webinar, we'll explore how Odoo supports our daily accounting tasks, right from customer invoicing and vendor bills to payment management, bank reconciliation, and financial reporting. By the end of the session, you'll have a clear understanding of how Odoo 19 enables smarter, faster, and more reliable accounting operations. Odoo's accounting module is designed to bring clarity and efficiency to our financial workflows. With features like automation, real time data updates, and seamless integration with other business functions, it helps you stay on top of our finances with ease. So, before we move ahead, a quick introduction about myself. I'm Fizza, a functional consultant at Cybrosys Technologies. So, Cybrosys Technologies is an ISO certified private limited company focused on delivering high quality software solutions to clients across the globe. So, with strong expertise in Odoo ERP, we specialize in customization, implementation, and a wide range of related services that helps businesses streamline their operations. In addition to ERP solutions, we also provide source code services and custom software development tailored to meet specific business requirements. Our approach is centered around understanding each client's unique needs and delivering solutions that are both practical and scalable. So, what truly sets us apart is our commitment to quality and continuous innovation. We aim to provide reliable, efficient, and future ready solutions that empower businesses to grow and adapt in a competitive environment. Now, let's understand why Odoo ERP is a preferred choice for businesses. One of the key strengths of Odoo is that it is built on an open source foundation. So, this gives businesses the flexibility to customize the system based on their unique requirements. With a strong community and continuous improvements, Odoo ensures innovation while keeping cost under control. It also promotes collaboration and empowers teams to work more efficiently. Another important aspect is its global acceptance. Odoo is a proven product used by over 12 million users worldwide, which reflects its reliability and scalability. Businesses across different industries trust Odoo for managing their operations seamlessly. What truly makes Odoo stand out is its ability to bring all business functions onto a single platform. From sales and inventory to accounting and HR, everything is integrated. This not only simplifies processes but also improves data accuracy and decision making. Overall, Odoo offers a solution that is simple to use, efficient in performance, and affordable for businesses in all sizes. So let's begin with a quick introduction to Odoo 19 accounting. Odoo 19 is designed to give businesses complete control over their financial operations in a simple and structured way. It brings together all key accounting activities such as invoicing, payments, bank reconciliation, and financial reporting into one unified platform. One of the major advantages of Odoo is automation. Journal entries are created automatically, bank transaction can be synced, and reconciliation is made easier with smarter suggestions. This significantly reduces manual effort and improves accuracy. Another key strength is its seamless integration with other modules like sales, purchase, inventory, and payroll. This ensures that all financial data is connected, giving you a complete real time view of your business. Odoo also supports advanced features like multi-currency transactions and tax management, making it suitable for businesses operating in different regions. Finally, with built-in reports such as profit and loss, balance sheet, and cash flow, Odoo provides clear insights into your financial performance, helping you make informed business decisions. So let's look at our agenda. So the main objective of this webinar is to give you a clear understanding of the accounting module in Odoo 19. We will be covering all the key features and core workflows that are essential for managing your financial operations effectively. So during this session, we'll walk through important areas such as custom invoicing, vendor bill management, payment processing, and bank reconciliation. We'll also explore how Odoo helps in generating accurate financial reports for better decision making. In addition to this, we'll highlight how the accounting module integrates with other Odoo modules, allowing you to maintain a complete and connected financial overview of your business. So, by the end of this session, you'll have a practical understanding of how to use Odoo accounting to simplify and streamline your financial processes. So, next, let me walk you through the key topics we'll be covering in today's session. We'll begin with a brief introduction to Odoo 19 accounting to set the foundation, and from there, we'll move on to the chart of accounts, localization, and the initial setup required to get started. Next, we'll look into how journals are configured and managed within the system, followed by a detailed walkthrough of customer invoicing, vendor bills, and payment processing. We'll also cover bank and cash movement to understand how transactions are tracked and reconciled. Moving forward, we'll explore analytic accounting and budget management, which help in tracking costs and improving financial planning. In addition, we'll discuss tax management along with the multi-company and multi-currency features that supports businesses operating across different regions. Finally, we'll take a look at financial reporting and how Odoo integrates all these processes into a complete end-to-end workflow. So by the end of this session, you will have a comprehensive understanding of how all these components come together in Odoo accounting. So to begin with, let's understand what the Odoo accounting module offers. Odoo accounting is designed to handle all core financial activities such as invoicing, payments, bank reconciliation, and reporting in a seamless manner. It provides a simple and well-structured workflow that makes accounting easy to manage even for non-finance users. One of the major advantages is its integration with other modules like sales, purchase, inventory, and payroll. This ensures that financial data flows automatically across the system without manual intervention. The system also supports automatic transaction recording, which reduces errors and saves time. Additionally, it is equipped to handle multi-currency operations and complex tax structures, making it suitable for businesses operating globally. With real-time financial reports, users can always have a clear view of their company's financial position, helping in faster and more informed decision making. So, Odoo also provides smart reconciliation suggestions, simplifying the process of matching transactions with bank statements. Finally, it allows you to easily track receivables and payables, ensuring better control over cash flow and outstanding balances. Now let's take a look at the chart of accounts localization and initial configuration. So the first step is setting up chart of accounts, which defines how all your financial transactions are categorized. Odoo provides predefined structures, but these can also be customized based on your business needs. Next comes accounting localization, which ensures that your system complies with the country specific regulation, including tax structures and reporting standards. Journals play a key role in recording transactions, and Odoo allows you to create and manage different types such as sales, purchase, bank, cash, etc. You can also configure physical positions to handle tax mapping and adapt to different tax rules based on customers or regions. And tax configuration is another important area where you can define tax rates, rules, and how they are applied across transactions. So, for businesses dealing with multi currencies, Odoo supports multi-currency configuration, and additionally you can also define default accounts for products and partners to automate accounting entries and reduce the manual work. And next, for the payment terms and the payment methods, we can also configure those, and we can match those with our business policies and customer agreements. And the system also allows you to set up bank accounts and cash registers for accurate tracking of financial movements. And finally, opening balances and initial entries can be configured to ensure a smooth transition when starting with Odoo, especially when migrating from another system. So next, let's start with journal configuration and management. So journals are used to record all financial transactions in Odoo. You can create different types of journals such as sales, purchase, bank, cash, credit card, and miscellaneous based on your business needs. So each journal is linked to default accounts, ensuring transactions are recorded correctly. You can also define sequences for proper numbering and link journals with payment methods. Odoo allows you to easily manage journal entries, post transactions, and control access based on your roles. So, Moving on to customer invoicing, Odoo allows you to create professional invoices quickly and apply taxes, discounts, and payment terms as needed. Invoices can also be generated automatically from sales orders, and you can send invoices directly to customers via email or portal. And we can also track their statuses and also manage the due payments. It also supports credit notes and helps in following up on the overdue invoices. So, next, let's look at vendor bills and payments. So, you can easily record vendor bills, validate them, and track all payables along with their due dates. So, Odoo supports both partial and full payments and integrates seamlessly with purchase orders. It also allows us to handle the vendor refunds and maintain a complete history of our vendor transactions. And next, we have the bank and cash management. Odoo enables us to configure multiple bank and cash accounts and track all inflows and outflows. You can sync bank transactions automatically or import statements manually. The system provides smart reconciliation suggestions to match transactions easily. It also supports internal transfers and gives a real-time visibility of our bank balances. Next, we have the analytic accounting and the budget management. So, in simple terms, this feature helps us to track our income and expenses in a much more detailed way. So, instead of seeing overall figures, we can track cost based on specific projects, departments, or cost centers. For example, if you're running multiple projects, you can clearly see how much each project is costing and how much profit it is generating. You can allocate these costs and revenues accurately, which gives us better control over our finances. Along with this, Odoo allows us to create and manage budgets. You can define planned amounts for different departments or projects and then compare them with the actual values. This helps us to understand where we are overspending or staying within the budget, and you can track all of this in real time. So next we have the tax management. So managing taxes can be complex, but this feature in Odoo makes it easy. So you can create multiple tax structures based on our business requirements, and once these are configured, taxes are automatically applied and calculated during transactions like sales and purchases. The system handles both input taxes and output taxes, so you don't have to manage them manually. It also generates tax reports that can be directly used for filing. If there are any corrections or adjustments needed, those can also be handled within the system. And importantly, it supports a region specific tax rule such as GST or VAT, making it suitable for different countries. So, now moving on to the multi company and multi currency. This is especially useful if your business operates in multiple locations or countries. You can manage multiple companies within a single system while still keeping their financial records separate. At the same time, you can handle transactions in different countries. The system automatically updates exchange rates and also records any exchange gain or loss. And if needed, you can view consolidated reports to understand the overall performance of all companies together. Next is the financial reporting, which is a very important part of the accounting. Odoo provides all the key financial reports such as the profit and loss, balance sheet, and cash flow statements. You can also access detailed reports like the general ledger and trial balance too. And also, these reports are generated in real time, so you can always have up to date information. One useful feature is the ability to drill down into the reports, meaning you can click on any figure and see the detailed transactions behind it. You can also compare reports across different periods and export them in formats like PDF or Excel. This makes it very helpful for analysis and as well as the auditing. Finally, let's look at the integration and the end-to-end flow. One of the biggest advantages here is how everything is connected. For example, in the sales process, it starts from a sales order, then moves to invoice, then payment, and finally the accounting entries are created automatically. Similarly, in the purchase flow, it goes from purchase order to bill, then payment, and the accounting impact is recorded. All the journal entries are generated automatically across these modules. So, because of this integration, financial reports are updated instantly. It also eliminates duplicate data entry and reduces errors. So, overall, this ensures a smooth connection between your business operations and accounting. So, now let's go to the Odoo database and see how our accounting module works. So, this is the Odoo database, and let's start our demo. So before we start working with the transaction, the first step in Odoo accounting is to set up the company with the correct localization. So localization in Odoo basically means configuring the system based on the accounting rules of a specific country. So for example, if we select India, Odoo automatically provides GST taxes, predefined chart of accounts, and compliance related configurations. Similarly, for other countries, Odoo provides their respective tax structures and reporting formats. So, before we proceed further, it's important to understand that Odoo provides multiple localization packages for different countries. So, each localization package is designed to meet the specific accounting requirements of a particular country. So, this includes predefined chart of accounts, tax structures, fiscal rules, and compliance report. So, here these localizations are available in the apps menu. So, when we go to the apps menu and search for the localization, so we have a short code for localization, that is L10N. So when we search for that, we'll be able to see the multiple localization packages that are available for different countries in Odoo. So here, for example, we have the modules for India, United States, the United Kingdom, and many other countries. So this flexibility allows the businesses to operate in different regions to easily configure the accounting system according to the local regulations. That is, when we create a country and when we specify the, when we create a company and specify the country over there, the localization will be that country specific accounting localization will be set, and the related chart of accounts, that is the chart of accounts and the journals and the taxes that the country uses, will be predefined in Odoo automatically with the localization. So here I have created the country Green Grow Traders, and I have set its country as United States. So, but for this session, however, I'll be using the generic chart of accounts so that we can focus on understanding the core accounting workflow without getting into the country specific complexities. So, let me go back, and I'm getting into the accounting module, and in the accounting module's configuration settings, we'll be able to see the package. So, here I'll be able to select the fiscal localization package that I intend to use for my company. So here, as I've said, I'm using generic chart of accounts for now, and also we can see the fiscal country that has been set as United States, and also we can view the main currency that has been configured for the specific country that I'm working in. So that is USD. And now going into the configurations and chart of accounts. Here we can see that once this company is set up, and I have set the fiscal localization, here Odoo automatically creates the essential accounting structure. So here we have the chart of accounts which organizes all the financial data into categories like we have the assets, liabilities, income and expenses such as. So that is we have different chart of accounts, and in these chart of accounts we'll be recording all of our financial transactions. So let me tell you, in Odoo, we have two approaches when setting up the accounting. That is, one is using a country-specific localization, and the other is using a generic chart of accounts. So as I said, for today's demo, I'll be using the generic chart of accounts to keep things simple. So we also we also need to understand the double entry bookkeeping system that the Odoo follows in our accounting. That is, every transaction, that in accounting, every transaction affects at least two accounts. So this is called the double entry bookkeeping system. That is, in simple terms, for every debit there must be a corresponding credit. That is, debit means value coming in or an increase in the assets or the expenses, and credit means value going out or an increase in the income or liabilities. So Odoo follows this system automatically in the background. So whenever we record a transaction, Odoo creates balanced journal entries without us needing to manually enter both sides. So here we have the chart of accounts, which is the foundation of accounting in the Odoo. So it is basically a list of all accounts that a company uses to record its financial transactions. So for every transaction in Odoo, whether it's a sale, purchase, payment, or expense and all, it is recorded into one or more of these accounts. So well, let's think of it like it is a structured list where all our money related activities are categorized properly. So, for example, we can say the sales goes into an income account, and expenses go into an expense account, and money in the bank goes into the bank account. So, this structure mainly helps us to generate accurate reports like the profit and loss, balance sheet, cash flow, and all. So now each account in Odoo is assigned to a type. So let's go to the current assets account over here. So when we view that, we'll be able to see that each account, this current asset account is assigned to the type current assets. So like this, each account is assigned a type, and this type decides whether it appears in reports or whether or how it behaves in the accounting. So let's go through it one by one. So here first we have the asset section under the balance sheet. So in this assets, these are the resources that are owned by the business. So we have the receivable account or receivable type under the assets first. So this is the money that the customer. So money customer owes us can be stored in the receivable account, and we have the bank and cash um, where money we have can be stored. And next we have the current assets, that is these are the short term assets. For example, we have the inventory, stock, and also these are the short term assets, and the and those accounts type can be set to current assets. And next we have the non current assets, which are the long term assets. Next we have the prepayments. So these are the advance payments made. So like for example, paid rent that has been paid for the next 6 months and all can be stored into a prepayment type account. And for the tangible assets, we can use the fixed assets account. Next we have the liabilities. So these accounts stores what the company owes. So here we have the payable account. So these the account which stores the money we owe vendors can be of this type. And next we have the credit card. So credit card dues and all can be stored here. Next we have the current liabilities. So these are the short term liabilities, that is bills payable within a year and all. And for the non current liabilities, we can create the long term liabilities under this type. And next we have the equity, that is the capital invested. For example, our owner invest $5 million and all, it will be recorded into an account which is of the equity type. And for the current year earnings, we can set the current year profit and loss. And next we have the profit and loss. So under the profit and loss, we have the income, that is money coming into the business. So these are the earnings from the business activities, and we have the main income, main business revenue under the income account. Next, we have the other income. So we can use other income for the extra income, like for interest received. Those kind of incomes can be recorded into other income account. And next, for the expenses, under the expenses account, we can set the regular business expenses like the salary, rent, and all. And for the other expenses, we'll be able to record the miscellaneous cost and for example, office supplies expenses. Such type of expenses can be recorded under this. And next, for the depreciation, we can set the asset value reduction in this account. And then we have the cost of revenue account. These are the direct cost of the goods sold. For example, the cost of purchasing products. And next, under the off balance sheet, we can set the accounts that are not part of the financial statements. Example, the temporary or memo accounts and all can be set under this. So, in short, the chart of accounts helps us to organize all our financial data, and these account types ensure that every transaction is recorded correctly and reflected properly in our reports. So, next we have the journals. So, in the journals, so basically, journals are used to record and organize all the financial transactions. So every transactions we perform, like a sale, a purchase, or a payment, it is recorded inside a specific journal. So we can think of journals as separate books for different types of transactions. So journals are important since it keep our transactions well organized, and we'd be able to track different activities separately using these journals. So we can consider these as separate books, and whatever transaction we perform under sales, like when we create an invoice and all, it will be it will be added to the sales journal. So you'll be able to track them separately and very easily. And it can also make our reporting clear, and it can make it in a structured way using these journals. So we have several types of journals. So let's get into the sales journal, and over here we have the type. So we have type these much types of journals, such as the sales, purchase, cash, bank, credit card, and miscellaneous. So the we as I have said, the sales journal is used to record all the sales related activities like the customer invoices and all. That is, whenever we create a customer invoice for, like, say we are creating a customer invoice for $1,000, so it will be recorded in the sales journal. And then next we have the purchase journal, which is used to record our vendor bills and all. So when we receive a bill from a supplier, it goes into the purchase journal. And next we have the cash journal, which is used for all the to record all the cash transactions. So cash sales or petty cash expenses and all can be stored here. And then next we have the uh, bank journal. So it can be used for all the bank transaction and the customer payments received in the bank, or the vendor payment made by bank. So all of these will be stored in the bank journal. And next we have the credit card journal. So with the credit card journal, we'll be able to record all the credit card related activities. And next we have the uh, miscellaneous journal, which is used for all the which is used to record all the entries which does not belongs to the already said journals, like sales, purchase, and all those entries will be recorded under the miscellaneous journal. And also, whenever we are creating a manual entry, we basically use the miscellaneous journal type. So these are the journals, and whatever we create, the journal entries will be added over here, and we'll be able to track down it very easily. So for the journals, we can set up the default income account, the dedicated credit note sequence. That is, here we have the sequence prefix for the sales journal as INV. So whenever we create a customer invoice, the sequence for the invoice takes a prefix of INV. So if we have enabled the dedicated credit note and a debit note sequence, whenever we are creating those, the prefix will be the that is, we'll be having a dedicated prefix for the credit note and debit note if we have enabled this. That is, it won't use the same sequence prefix as as this journal. And we can also set the currency. And under the advanced settings, we can set the automation. That is, if we have enabled the posted entries with hash over here, we will not be able to reset the journal to the draft state. Once it's posted, we won't be able to reset it to draft. So like that, we'll be able to configure its the journal settings. So similarly, we have the sales journal. This is the purchase journal, and we have the bank journal. And in the bank journal, we can see that we'll be able to set up the bank account over here. We can set up the suspense account. That is, whenever we are creating statements and all, until it has been matched, we'll be able to store those statements under the suspense account, which we are providing over here. And then we have the dedicated payment sequence for this. And also we have separate tabs for the bank journal, such as we have the incoming and outgoing tabs. So under the incoming and outgoing tabs, we'll be able to set up the payment methods that we can use under those. So for the payment method, we can specify its name, and we can also set up the outstanding receipts account that should be used. So whenever we are doing the accounts, make sure that we have already set the outstanding receipts account for the incoming and outgoing payments. So we'll be using the manual payment for our demo in the session. So here I'm going to add the outstanding receipts account for the manual payment method. So here we have the 101,403 outstanding receipts account. So I'm going to add that, and let me save this. So if you need to create the journal entries for the payment, we have to make sure that the outstanding receipts and payments account has been configured. So here I have set the configure the outstanding receipt account. So going to the outgoing payments, we have the manual payment and the outstanding payment account. So I'm going to set the outstanding payment account as well. And next we have the check printing, the uh, yeah, the Nacha configuration. That is, we can set the immediate destination, the immediate origin, and all. And next we have the going to the next journal. We have the miscellaneous operations journal. That is, we have set the type to miscellaneous. So for all the entries which does not belong to the said types of the journal, this journal type will be used, and also for all the manual entries as well. And next we have let's get back. And as said, we have two more types. That is, sorry, that is, we also have the cash and credit card also. So these are the types of journals. And next we have the currencies. So under the currencies, we'll be able to view all the preset currencies in Odoo. And here we have these much currencies which we have made active. So if we have activated the currencies, we'll be able to use it in our invoice, bills and all, and we'll be able to make transactions on in that currency as well. So we also have the option to create a new currency, and for the currencies we can set up the currency name, the whether it is active or not. We can set its symbol, the currency unit, the subunit of the currency, and we can set the symbol position, whether it should be shown the before amount or after amount. So we can also set the rounding factor over here. And since we have set the main currency of our country as USD, we can see it is activated, and all several other currencies has also been activated. So over here, sorry, let me get back. And this is another currency, that is Indian rupee. So Indian rupee has also been activated, and here we can see the rates. So we'll be able to set the exchange rate of our currency over here. So if we are doing our transaction in any other currency, and we need to record its exchange difference, we'll be able to look into the difference exchange difference rate that we have provided here, and it will create entries based on that. And we can also automate the exchange difference from our configuration settings. Next we have the fiscal positions. Sorry, before that I have missed the taxes. So getting into the taxes, we have several taxes that has been defined. So to create new taxes, we can get into the taxes over here, and we'll be able to create the new tax. So I'm going back to an already existing tax. So we can provide the tax name, and we have several tax computations. Like we have the group of taxes that we can, that is, we can add several taxes under one tax, and we'll be able to use that tax in our invoice or bill. And the group of taxes that we have given in that, the computation of the tax will be based on the group of taxes that we have provided under that tax. Next, we have a fixed tax. That is, whenever we have given fixed tax, we'll be able to provide a fixed rate, a fixed amount that needs to be taken as our tax. And next we have the percentage. So if we are selecting the percentage, we can set the percentage amount. So here we have set the 15 percentage tax. So a 15 percentage of tax will be applied to our invoices. Next we have the percentage tax included. That is the tax will be calculated. That tax can be calculated based on based on some percentage of the tax that we are providing here, and it will be included in our price itself. And next we also have the custom formula. So we can provide a custom formula for the taxes, and apply that tax as well. So here let's set it as percentage, and we can also set the distribution for the invoices and the refunds. So here I have provided the 100 percentage of tax should be recorded in our account tax receipt. Like that, we can provide the distribution for the invoices and the refunds. And under the advanced option, we have several other options, like we can set the tax group. So we have the tax group over here, and whether the tax should be included in the price or excluded in the price. So we have two options which we can select. So if we have provided this 15% tax to be as tax included, the 15% tax will be included in our product price itself. Otherwise, if it is excluded, tax will be applied, and later on it will be added to the product's price. And then next we have the effect base of the subsequent taxes and the base affected by previous taxes. So in effect base of subsequent taxes, this tax will be included in the base amount when calculating the next tax. And that is if the product price is 100 and we are applying two taxes, that is we have tax 1 as 10% and tax 2 as 5%. So if this option is enabled for tax 1, the tax 1 will be calculated as 10, and for the tax 2, the 5% tax will be calculated on the base amount of 100 plus the first tax 10. So the amount will be 110 and the tax 2 will be calculated on that. And for the next one, that is base affected by previous taxes, this tax will be calculated on an amount that already includes the previous taxes. So like if the product price is 100 and we have tax 1 and tax 2 as 10% and 5% respectively, and let's say the tax 1 is $10, and we'll be calculating the tax 2 on the $110 if the tax to if this is enabled for the second tax. So this is how it works. So these are the basic configurations for the accounting, and now let's see how these are applied in our customer invoices and vendor bills. So for that, let's go to the customers, and under the customers we have the invoices. So from here we'll be able to create a new customer invoice and register the payments. So let's click on the new button. So before creating an invoice, let me explain one more thing under the configuration, that is the payment terms. So we have the payment terms over here. So payment terms basically defines when and how a customer or vendor should make the payment. So instead of paying immediately, payment terms allows us to set the due dates or the installments, advance payment on payments and all. So we have different payment methods that has been created. So like immediate payment. So in immediate payment, we'll have to pay the 100% of the total amount after 0 days of the invoice date. So we have several options to set it as number of days after the end of the month, days after end of next month, or days end of month on the, and we'll be able to set a specific days over there. So like that, we can set the payment terms. And we can also set the follow-up levels as well, and in the follow-up levels we'll be able to create different follow-up levels that needs to be taken. That is if a customer did not pay the amount after the due date also, so we need to we need to follow up on that so that the customer pays the amount. So for that we'll be able to set we'll be able to create the follow up levels over here. So we can set when to remind the customer or the vendor, that is when to remind the partner. So we can add the remind days after the due date, and what action needs to be done, that is whether an email has to be sent, an SMS, letter, or and all. So if we have set the email, we can also select the email template, that is for this case we can set it as payment reminder. So a payment reminder mail will be sent to the customer or the partner if they have not paid the amount after the due date also. And we can also attach the invoices or add the followers or make it automatic from here. So getting back to the customers and invoices, let's going to cancel this, and I'm getting back to the customers and invoices. So in the invoices, we'll be able to create a new invoice from here by clicking on the new button, and in the customers over here we have all the customers that has been created in our database earlier, and while creating the invoice we can select from them very easily. So I'm going to create a customer invoice for the customer Deco Addict. So I've added the customer, and we can see the invoice date, the due date, and if we need to change the due date, we can simply click on the payment terms. That is, if we need to add a payment term so that it defines when the customer should make the payment, we can add the payment term from here. So that is the use of the payment term. And under the product invoice lines product, I'm going to add the product, let's say customizable desk white custom. So we can see the account over here that is being affected. So this is the income account that is being affected for the invoice, and we can add the quantity, and I'm going to set the price as $1,000, and we can see the tax that we have added. So we can see the untaxed amount as 1,000, and since we have applied the 15% tax, the tax 15% is given as $150, and the total amount has been set to $1,150 total. So I'm going to confirm the invoice. So here we can see the invoice is in the draft state right now. So once I confirm the invoice, it will be changed to the posted state. So I'm going to the journal items where we'll be able to see the accounts that has been affected for the invoice that I've created. So before that, we have to know that every transaction in Odoo follows a double entry accounting. So as I have said, Odoo follows a double entry bookkeeping system. So for every transaction, it creates a double entry accounting. So at least one account will be debited, and at least one will be credited. So the total debit should always be equal to the total credit. And here we can see we have created a customer invoices. So here the account affected is the product sales, which is the income account that we have set. So here the income account has been here the income account, since we have created the invoice, we can say that the income has increased. Since the income has increased, it is marked on the credit side. So the amount 1,000 has been marked on the credit side since the income has increased when we have created a customer invoice. And next we can see that the account receivable. So this account receivable means the customer now owes us money. So it means our asset increases. So since the asset has increased, it is recorded on the debit side. That is, whenever the asset increases, it will be recorded on the debit side, and whenever the income increases, it will be recorded on the credit side. And next we have the tax received account. So in the tax received, we can see that it is also recorded on the credit side, since not our income but we owe it to the government. And next, here we have created the invoice, and now let's see what happens when we create a vendor bill. So I'm going to the vendors, and under the vendors we have the bills. So I'm going to create a new bill. So instead of creating a new bill, we can also upload a bill, and it will be created as a bill in our system. So let's click on the new button, and I'm going to set the vendor Gemini Furniture, and I'm going to add the product. So let's say the product, sorry, here it is label. So I'm going to enable the product, enabling the product, and I've disabled the label. So let's click on the add a product, and I'm going to set the product as corner desk right set, and let the product price be $500. And here in the invoice, here in the tax, we can set the tax, and I've set the quantity as 1. So let me confirm the invoice, and once we have confirmed the invoice, it will be changed to the posted state. And now in the journal items, we will be able to see the accounts that has been affected. So here we have the expense account. So here the expense account has been debited, and the accounts payable has been credited. The accounts payable, that is when we have created the vendor bill, the 500 was recorded under the accounts payable. So it is shown under the current liabilities, accounts payable as 500. And next we have the total current liabilities, which was the vendor bill plus the other current liability 150. So 150 was the tax amount which was recorded for our invoice. So that tax 150 has been recorded as a liability for us. So it is recorded under the other current liabilities, and we'll be able to view the total current liabilities as $650, and the total liabilities is also $650. And next we have the total unallocated earnings, which was 500. That is, this is the profit that we currently have, which we have seen in our profit and loss account. So this is the total unallocated earnings, which is our 500, and we have the total equity as 500, and the total liabilities and equity is given as $1,150. So this is how the balance sheet is the balance sheet reporting is done. And next in the reporting, let's see the general ledger. So this general ledger shows all our journal entries. So according to the accounts. So we'll be able to view an account wise detailed view in our general ledger. So if you want to see exactly where each debit and credit went, this is a report. So we can just drill down, and that is under the each report we'll be able to view our journal entries. So we are under the account receivable. So over here we can see under the account receivable we have the balance $1,150. So to show from where it came, we can just click on that, and we have the journal entry which was created. We'll be able to view the date, the partner, the debit and the balance. And under the total account receivable also we have the amount. And next, under the accounts payable, we'll be able to view our payable account which we have created for our invoice, that is $500. And for the tax received, we have already recorded $150 for our tax receipt, which was added in our invoice. And then we have the income and our expense account. So, I mean, expense account. So, for the invoice, it has affected the income account for $1,000, and for the expense, it has affected the expense account for, and for the vendor bill, it has affected the expense account for the $500. So we have the total general ledger as $1,650. So this is how we can do the reporting, and for each reports we have multiple filters or multiple uh, dates and all that can be added. So here we have we'll be able to view the monthly report, the quarterly, the yearly report and all. And we can also enable the journals that needs to be shown. That is, if we need to show simply the sales journal, let's click on the let filter it by sales, and only the sales related journals will be shown. So here we can see the vendor the vendor bill is not shown, and the expense account and all is not shown. Account payable and expense accounts are not shown since it does not belong to the sales journal. So like that, when we enable the purchase and let's disable the sales. So here we'll be able to view the accounts that has been recorded for the purchase journal. So like that, we'll be able to add the filters and all. So these are the reportings for the invoice and the vendor bill I've created. And now let's get back and do the payment. So let's see when we make the payment how the reports are affected. Before that, let me show you the aged payable and receivable report. So let's get into the reporting, and we have the aged receivable report over here. So in the aged receivable report, we'll be able to track our pending customer payments, identify overdue invoices and all. So here we have the partner's name, and we'll be able to view the pending invoice overdue amount, that is $1,150. And in this report structure we can use the egg date 1 to 30 and all. So it is if the amount is due at this date, we'll be able to view the amount over here. Or if the amount is due in between 1 to 30 days, we can view it over here. And if it is due for 31 to 60 days, the amount appears here. Like that, we'll be able to understand the report. And similarly, we have also created a vendor bill. So in the aged payable report, we'll be able to view the or track our vendor dues, and we can plan the payments or avoid late payment fees and all. So here we can view the payment. Sorry, we'll be able to view the vendor's partner's name, and since it is due at this date, we can view the amount. Now here we have seen the reporting that is in the balance sheet view. We'll be able to view the financial position of our company at that specific date. So we'll be able to analyze the assets, liabilities, and equity. So overall, we'll be able to check our company's financial health. And next, we have discussed the profit and loss also. So in the profit and loss, we were able to analyze the profitability over a period for our company. And also, in this, we can view whether we are making profit or loss, and which expense was high, like that. We'll be able to understand different things. And next, we in the general ledger, we'll be able to get a detailed record of all our transactions for each account. So we have um, I'm just disabling this. So we'll be getting all of the journals over here. So we'll be able to get the detailed transactions record for each journal. And also we can drill down into every transaction. Like if we want to if we want to view the journal entry, we can view the journal entry. So this was a journal entry which resulted in this entry, like that. So now getting back to the customers and invoices, let's get into the invoice. And here we have the pay button. So when we click on this, we'll be able to make the payment. So when we make the payment, we can select the journal. So we have seen multiple journals. So from here, we'll be able to select the journal, and we can set the payment method as well. So we have configured two payment methods in our bank journal as manual payment and batch deposit. So we can select the payment, and then we can set the amount, the payment date, and all. And let's click on create payment. So here we can see the payment has been created, and we'll be able to view the smart button payment over here, which has been linked to the invoice. Since we have created the payment through the invoice, we'll be able to view it over here. Let's click on the payments, and we can view the payment, and also the journal entry that was created for this payment. So let's click on the journal entry. So in the journal entry, we can now see from the account receivable, when we have registered the payment, the account receivable has been credited, and the money the amount has been recorded in the outstanding payments as a debit now. So that is when the payment is registered, we can see we can view that the an outstanding account has been debited for the same amount, and the account receivable has been credited. So this is the journal entry that has been created for the payment. So it basically means that the customer due is cleared, but money is not yet confirmed in the bank. That is, the invoice will be in the in payment state, not in the paid state. So here after the reconciliation, that is when we match our bank statement with the payment, the bank will be debited, and the outstanding receivable account will be credited, or outstanding receipts account will be credited. So then we'll be able to understand that the money is officially in the bank. So that is when we register a payment in Odoo, the system does not immediately assume that the money is in the bank. Instead, it is temporarily recorded in the outstanding receipts account. So this represents that we have received but not yet verified the reception of our money with the bank statement. So let's get back to the invoice. And in the invoice, we'll be able to see that the money is in the in payment state. So now let's see how we can reconcile this payment. That is, reconciling means we have to match our registered payment with our bank statement. So either we can import our bank statement, or we can also manually add the bank statement and then match our bank statement with the payment that has been registered in our system. So I'm just copying this invoice number so that I can add it to the label. So here the customer who has paid us is Deco Addict, and we have received $1,150. So I'm going back to the dashboard, and in the dashboard we have the bank journal. So let's get into the transactions, and over here we do not have any transactions yet. So I'm going to add a new bank statement. So to create a bank statement manually, let's click on the new button, and over here we have the label. So I'm providing the label as the invoices number, and then we have our partner Deco Edit, and we have our amount $1,150. So I'm going to add and close this. So we can see that once we have created the statement and added, it has been automatically reconciled. That is, the system automatically matched our statement with an existing payment in our system. So let's get back to the customer invoices, and in the invoices we can see that the status has been changed from in payment to paid state. That is when we have reconciled our payment in the bank. The in payment label has been changed to the paid state. And also we will be able to view the journal entry that has been created corresponding to the reconciliation that we have done. So in the accounting we have the journal entries. So I'm going to search. So here we have our so first the we have our journal entry, that is the invoice that we have created. So that is a that has been recorded in the sales journal. Our invoice has been recorded in the sales journal, and then we have our payment. So we have registered our payment in the bank. So when we have, before that let me get into the invoice. So in the invoice we have already discussed that the uh, account receivable account receivable has been debited with our invoice amount, and the tax received has been credited, as well as our income account. So now since the invoice has been created, the customer owes us this amount, that is recorded in the account receivable. And then when the customer makes the payment, we have the journal entry that has been created as the account outstanding receipt is debited and the account receivable has been credited. So that it means that the customer due is cleared, but the money is not yet confirmed in the bank. And after that, when the reconciliation has been done, we have our journal entry created, such as the outstanding receipts account has been credited and the bank account has been credited. It means now the money is officially in the bank. So this is how we do the reconciliation and matches our payment in Odoo. So this is an entire process that is from creating an invoice to registering a payment, and the and reconciling the payment and all. This is the actual flow. And when we have made the payment in the reporting in age receivable, we'll be able to see that the amount due which was shown over here has been removed, since there is no customer, since there is no due from the customer. So this is how it is done. And now let's also get into the cash flow statement. And in the cash flow statement report, we'll be able to view the cash flows that is being taken place in our accounting. So we have the cash and cash equivalents closing balance set as $1,150. And also we are Here the total cash received from operating activities has been shown. So this product sales account has been tagged as the operating activities. So all the cash flows related to this account will be shown under this. That is, let's go to the configuration and chart of accounts. So we have the product sales account. So let's get into the product sales. Sorry, let's view the product sales account. And over here we can see the tag has been set as operating activities for the product sales account. So in the reporting and cash flow statement, we can see that the cash received from operating activities includes this account and the amount which has been recorded in that account. So this is how it is done. And now this is how we can create the basic. This is the most basic flow of the invoice. And now let's get into the vendors and bills. So we have created the vendor bill over here, that is for Gemini Furniture, in $500. And we have the journal items, that is the expense account has been affected, and the expense account has been debited for this bill, and the accounts payable has been credited as 500, since we owe the partner money. The company owes the money to the partner. So now let's register the payment for this bill. So for that, I'm going to click on the pay button and create payment, and the payment has been registered. So we can see the payment is in the in payment state, and we have the payment over here and the journal entry. And in the journal entry, we'll be able to see that the account payable has been debited and the outstanding payments has been credited over here. So now when we create the, I mean, when we reconcile, the payment gets matched, the payment is matched to the bank statement, and it will be the in payment state will be converted into the paid state. So, and we can also see the journal entry or the accounts affected in that reconciliation. So now let's get back to the bill, and I'm just copying the bill's ID, and we can just we have the vendor Gemini Furniture and the amount as $500. So I'm going back to the dashboard and to the bank transactions. So I'm going to create a new statement. So let me add the label, and the partner is Gemini Furniture. And since it is a bill and we are paying the money to the partner, the money gets out of the bank. So the bank statement should be made in the negative amount. So I'm adding negative 500 and adding and closing this. So once we have added the statement, we'll be able to see the payment has been reconciled. It has been matched with the payment that was, the bank statement has been matched with the payment that was created. And now when we go to the vendors and bills, we'll be able to view that the bill is in the paid state right now. So going to the accounting menu and to the journal entries, we'll be able to view the bill over here. So this is the payment that was registered for the bill, and this is the here we'll be able to view the journal entry that was created for the reconciliation that we have done. That is, the outstanding payments account has been debited and the bank account has been credited, since we have paid the money from our bank to the partners. So this is how we can reconcile the payments for our invoices and bills. And so let me show you the partner ledger report also. So we have the partner ledger. So these are the two partners with whom we have we have created the invoice and vendor bill. So here we'll be able to see the debit and the credit for these partners over here. And also going to the tax report. In the tax report, let me change the month to April. Taxes that was applied to the sales, that is 150, the 15%. So like that, we'll be able to view the tax report. And moving on, let's discuss a key feature in Odoo accounting, that is analytic accounting and budget management. So, in the configuration settings, we have to make sure that the analytic accounting and budget management is enabled. So, over here, under the analytics, we have the analytic accounting and the budget management. So, we have to make sure that both of these features are enabled, so that we'll be able to use that feature properly. So, analytic accounting, it basically means it is basically used to track income and expenses in detail beyond the normal accounting. So, it can be used for, it is usually used for like the projects, departments, and all. So, while financial accounting answers how much did we spend, we get we'll be able to analyze where exactly did we spend and on what using this analytic accounting. So this is for this we'll be using analytic accounting, that is to track where we have spent exactly. And when we have enabled the analytic accounting under the configuration settings, we have the analytic distribution models, analytic accounts, and analytic plans. So we have also enabled budget management. So budget management is used to plan and control our expected income and expenses. So instead of just tracking what happened, we can define what should happen and what should happen using this budget. And we can understand what actually happened using this analytic accounting. So, uh, that is, we'll be able to set a proper budget for our expense or revenue, and we'll be able to track on what we have spent, and also with the budgets, we'll be able to see what should happen. That is, how much we are setting our budget. So I'm going to the configuration, and I'll be creating the analytic plan first. So under the analytic plans, we have already created the projects, departments, and internal. So getting into the analytic plan project, we'll be able to see whether if we need to set any parent analytic plan for this, we can do that. And then we have the default applicability, that is whether this analytic plan should be applied optionally or it is mandatory, or whether it is unavailable. That is in the applicability over here, we can set the domain. That is, if you are setting for invoice, if we are setting for invoice, and we are also adding the financial accounts, like all the accounts using the financial account prefix 64041 and all. And also we can set the product category, that is the clothes product category. Whenever we are creating an invoice for product under the clothes category, this analytic plan should be applied. If you are setting it as mandatory, it will be considered like that. Whenever we are creating an invoice for the product under this category product clothes, this analytic plan should be applied for that. That is how we can set the applicability for the analytic plans. So I'm just removing this. And also we'll be able to view several analytic accounts under this analytic plan over here. So these are different analytic plans. So I'm going to create two analytic plans. That is, let's say we are managing two different plans in our company, project A and project B. So with this, we'll be able to understand how much cost is spent on each project and which project is more profitable and all. And also with by creating an analytic plan called project, we'll be able to we'll be able to analyze all the costs based on projects. So under the projects itself, I'm going to create two new projects, that is project A, and I've set the plan. So since I'm going to create the analytic account from the analytic plan, we can see the plan has already been set, and I'm going to save this. And then I'm going to create one more analytic project, that is a project B. So these are two projects, and I want to analyze how much we have spent on these two projects. That is, let's say we have a marketing budget that has been set for our company. So I want to analyze how much of the cost has been used for both of these projects separately. So here I've created the project B also. And now I've showed you the analytic plan, and I've created two projects, two analytic accounts under the project. And now let me create a budget. So under the accounting menu, we have the analytic budget. So I'm going to create a new budget. So let's say marketing budget. I'm going to create a marketing budget from for Jan to April. Okay, and we have three budget types: revenue, expense, and both. That is, if we need to track the revenue, if we need to set a budget for the revenues, we can set it as revenue, otherwise expense, or else both. So I'm going to set it as expense, and let me set the period as from January 1st to April 30th. So this is my period. And under the budget line, I'm going to add the project, that is project A. So for project A, I'm going to set the budget as $1,000. And for project B, I'm going to set the budget as $2,000. So we have the marketing expense for both of these projects as $1,000 and $2,000. And I've created the budget, and I'm going to open this. So yeah, so the budget has been created, and let me go to the vendors and bills. So I have received a bill for my marketing. That is, I have set a team for advertising. So before that, let me go to the products, and I'm going to create a new product just for the understanding. Advertising. And this is a service product, and the sales price is 300 per hour, and the cost is 100. Sorry, we just need to set that. And I'm going to the vendors and bills, and I'm going to create a vendor bill. That is, we have received a bill for our for advertising. So I'm going to add the product advertising, and let me add the quantity. So they have worked for us around 20 hours, and we can see the amount over here as 2,000. So for now, I'm just removing the tax, and over here we'll be able to set the analytic distribution. So for the advertising, we have spent project for project A, we have spent 60 percentage, not 60, 40 percentage of the total cost. And for project B, I have spent the remaining 60 percentage. So this is how I'm going to distribute this amount. That is, for project A, for advertising, it costed our company 40 percentage of 2,000. And for project B, we have spent the 60 percentage of 2,000 for advertising. So I'm going to confirm this. So once I have confirmed this, let me go to the accounting and analytic budget. We have the budget over here. So we'll be able to view the budgeted, the committed, and the achieved amount in the budget. So we have multiple options, more options like the theory. We'll be able to view the theoretical amount, the committed, achieved, and theoretical percentages also. So I'm going to enable this theoretical amount, and over here we can see the budgeted amount. That is, this is the budget that I have provided for the project A. And then we have the committed amount. So the committed amount includes all the already billed amount for that project and for that account for this project A, and also the confirmed POs. that is all the confirmed purchase orders amount and also the billed amount for our product for which we have added this analytic account will come under this. So since I have given created a bill for 2000 and provided 40 percentage for project A, we can see the committed amount is given as 800, and the achieved amounts means the amount billed or invoice only. The confirmed purchase orders amount will not be reflected in achieved amount. So here we'll be able to see 800, and in the theoretical we'll be able to view the amount that is supposed to be billed or invoiced. That is, according to our budget for the period till now, what amount should be actually spent for this expense is shown over here. So we have a formula for that. That is the budget amount, which is the 1000 divided by the budget days. That is, we have January 1 to April 30. So we can calculate how many days are under these months, and we will be able to know the budget days multiplied by the budget days completed. So here we have 24th April. So how many days have been completed? So like that, with this formula we'll be able to achieve this theoretical amount. So this is how we'll be able to manage our budget. So with this we'll be able to understand how we'll be able to understand we have more amount to spend on this project A from our budget, since we have spent only $800 and we have the budget set as $1000 for our marketing expense for project A, and we have for project B we have $2000 which we can spend on marketing for our project, but we have spent only $1200 till now. So like that we'll be able to make use of this budget and we'll be able to properly manage our budgets using our budget management. And going to the configuration and the analytic accounts, let's go to the project A. So we have project A and B. So here under the project B, we'll be able to view the budget analytic and the start date and the end date, and we have the budgeted and the committed amount over here, and we can also view the gross margin. So we'll be able to view the margin from here, and also we have the vendor bill that has been associated with this. So similarly for project A also we have we'll be able to view this. And next under the configuration, let me go to the analytic distribution models. So with the analytic distribution models, we'll be able to pre-create analytic distribution model. That is, you have just seen when I have created the bill right now, I have given 60% for the project B and 40% for project A. That is the analytic distribution that I have provided over there while creating the bill. So instead of that, we'll be able to preset an analytic distribution model. That is how the distribution should happen. That is, we can set the account prefixes over here, or we can set the partner or the advertising. So let's say for the advertising, always the analytic distribution should be as project A should have 40 and project B should have 60. So like this, we'll be able to pre-create the analytic distribution model. So whenever we are using this product in our bill, whenever we are using this product, automatically this will be the analytic distribution. That is, the total amount will be split like 40% for project A and 60% for project B. So this is how we'll be able to manage the analytic accounting and the budget management in Odoo. And next, let's see how can we manage the assets in Odoo. So we have asset management in Odoo. So let's see how it can be managed. So before that, let me show you one more thing, that is under the reporting, we have the analytic report. So we'll be able to view the analytic report over here. So let's view it by the project. So we will be able to view the total amount and by the project A and project B also. Then we also have the quantity, that is we have spent 20 hours of advertising on project A and 20 hours on project B. So that is how we'll be able to view the analytic reporting. And also under the accounting and analytic budget, we have the budget, and in the budget we'll be able to view the budget report. So this is the budget report, and from here we'll be able to view for the project A we have the budget 1000, committed is 800 and achieved is 800. So like that we'll be able to we'll be able to view the analytic budget report from here. And since with the budget we are actually setting a planned amount of money allocated for specific purposes. So that's why we are using a budget. And now let's get back to the dashboard, and now let's see how the asset management in Odoo works. So talking about the asset management and depreciation in Odoo, let's say in any business, when we purchase items like laptops, machinery, or vehicles, we don't expense the full amount immediately. Instead, we spread the cost over multiple years, and that process is called depreciation. So, here under the accounting menu, we have the assets option. So, let's get into the assets, and let's click on the new button to create or add a new asset. So over here, we'll be able to create the assets by giving all these. So first we have the asset name. So this is simply the name of the asset. So for now, I'm going to let my assets name be laptop. And then under the assets value, we'll be able to provide the original value. So original value, it is the this is the purchase cost of the asset. That is with which price we have purchased our product. So I'm going to give the original value for my laptop as $1,000. And then we have the acquisition date. So this is when the asset was purchased or put into use. That is, it is very important for depreciation calculation. So I'm setting the date as today's date. And then we have the asset model. So if we have already created an asset model, and if we are going to add that asset model to our asset, it helps to automate the setup. That is, we can predefine the 5-year depreciation for equipments and all in that asset model. So here we have several asset models, and I'm going to add my asset model, machines and tools. So getting into the asset model. Okay, let me provide the depreciation account. So I'm setting the depreciation account as the fixed asset. And then let me also add the expense account and then the journal. So now let's get into the asset model. And over here, we can see the asset model that we have created, and we can also set the depreciation methods and the accounting over here. So getting back. Now we can see that the depreciation, now next we can see the depreciation method. So we have several depreciation methods, like we have also, let me talk about the asset model. That is the asset group is mainly used for the classification and the reporting. Like we'll be able to add the asset groups if it is electronics, furnitures and all. We can add the asset group over here. Then under the current value, we have the not depreciable value and the book value. So the not depreciable value, it is also called the residual value. That is the amount we don't depreciate. So however, although the depreciation takes place and the amount get reduced, there will be a certain point at which there won't be any depreciation. That is, that amount won't depreciate. And then we have the book value. So this will be the current value of the asset after the depreciation. So here, since no depreciation has depreciation has not yet started, we can see the book value as the original value itself, that is $1,000. And next we have the accounting section. That is in the accounting, we have the company name, And we can set the fixed asset name so that it is properly shown in the balance sheet reports and all. And then we have the depreciation account, that is, it reduces the asset value accordingly. And the next, in the expense account, we can set the account so that so that it impacts our profit and loss. And also then we can set the journal, and if we have to set the analytic distribution for this asset, we can set the analytic distribution over here. And next, under the depreciation methods, we have different methods. We can set the duration, the computation, and the pro rata date. So first, we have set the method. We have three methods, that is straight line, declining, and declining then straight line. So we have set the method as straight line, and it is the simplest method. That is, the depreciation happens in a straight line in a fixed value. So here we have set the duration as 60 months. So let me just change it. I'm setting the duration as 5 years. So I've set the duration as 5 years, and the computation, we have three computation methods, that is no prorata, constant periods, and based on days per period. So with the no prorata, here the Odoo ignores the exact purchase date. So even if we buy the product at April 24th, uh, full year depreciation is applied. It does not consider the purchase date. So this is simple, but it won't be very accurate, the no prorata computation method. And next we have the constant periods. So this will be more practical, like it will the first year will be adjusted and the remaining years will be fixed with the constant periods. So like if asset is used for a part of the year, depreciation is calculated only for that period, and after that all years will have normal depreciation. And next we have the based on days per period. So this is the most accurate method, that is, the depreciation is calculated daily. For example, each month depreciation depends on the number of days, that is, April, May, June will all be different. That is, some of the ones have 30, 31, and all. So it will be calculated according to the number of days. So it will be more instead of yearly calculation, this gives us a precise day wise depreciation. So for now, let me just set the computation as no prorata, and I'm going to set the method as straight line. And we have the value at import, that is, which means we'll be able to set a depreciated amount till now. That is, if we are importing the asset after a certain depreciation, so the depreciation amount can be provided over here. So from that depreciation onwards, further depreciations can be calculated in Odoo. So I have set the method as straight line, duration is for 5 years, and the computation is set to no prorata. So since the computation has been set to no prorata, we do not have to give any certain date and all. It will be considered for the whole year. So I'm going to compute the depreciation. So when we click on compute depreciation, we have the depreciation board. So in the depreciation board, we'll be able to see the complete depreciation. So since it is the depreciation method is straight line, the depreciation is calculated by dividing the asset cost equally over its useful life. So here, since we have set the computation as no prorata also, we'll be taking the full yearly depreciation ignoring the purchase date. So the depreciation will be 1000 divided by 5, that is cost divided by the number of years, equal to 200. So every year 200 is depreciated. So we have, for this year we have the depreciation as 200, and we have the cumulative depreciation and the depreciable value. That is, from 1000, 200 is depreciated, and we have the depreciable value for this year as 800. And for the next year, since it is set as a straight line, we get the depreciation as 200 itself, and the cumulative depreciation is 400. And then we have the depreciable value. That is, from 800, 200 has been reduced, and we get 600. So similarly, we get the complete depreciation for 5 years from here. And next we have the depreciation computation as constant periods. So with the constant period, the first we'll calculate the depreciation yearly, then we'll multiply it by the fraction of the days that the asset was used in the first year. That is for the first year. That is for the first year, we'll be considering only the part where it has been used in that year. So, unlike the computation we did with no prorata, where we were considering the whole year, even though we just started using the product on April 24th. So, let me just compute the depreciation for this. So, we have set the method as straight line and the computation is constant periods and the prorata date is April 24th. So, I'm going to compute the depreciation, and here we have the depreciation board. So, in the depreciation board, we'll be able to we'll be able to calculate the depreciation for the first year only from the date when we have started using the asset. So, here let me open the calculator to show you. That is the first year depreciation is given as 137.22. That is our depreciation is 200. That is since it is straight line, 1000 divided by 5, our depreciation is 200. So basically for full year we have 200, but since we are just calculating the depreciation from April 24th, we have to get the depreciation for that that year. So 200 divided by 200 multiplied by the number of days, that is from April 24th to December 31st, we have 251 days divided by 365, our total years, and we have the depreciation for the first year as 137.53. So approximately we got the value for the depreciation for the first year. So the depreciation is the depreciable value is 1000 minus 137.22, that is 862.78. And then 860 then for the remaining years we'll be calculating it as full year itself. So 200 is the depreciation and we'll be reducing the 200 from our depreciable values, and this is how our depreciation goes on. And now next, let's set the computation as based on days per period. So, for based on days per period, we'll calculate the depreciation for each period based on the exact number of days the asset is used. So, the depreciation, the formula is, let me, so in the calculator, we have the number of the depreciation as 200 multiplied by same, that is for this year, the exact number of days is 251 divided by the so before that let me I'm just closing this and I'm going to compute the depreciation. So in the depreciation we have the depreciation board. So we can see for the first year we have depreciation 138.01, similar to the depreciation we have calculated earlier for 200 multiplied by 251 divided by 365. So we get the depreciation, and like that we'll be calculating the depreciation. That is exactly based on the number of days. So this for the first year we have the 137, and for the next year we have completely we know the number of days, that is 365, and unless it is a leap year we have 365 days. So we'll be calculating exactly the number of days for the asset have been used. And next I'll be setting the method as declining. So next we have the declining method. So when we set the method as declining, we have to provide a declining factor. So I've set the declining factor as 30 percentage per year, and the duration is for 5 months, and the computation, let me set it as no pro rata first. So here the depreciation is calculated as a fixed percentage of the remaining book value every year. So we have the book value as 1000. So the depreciation is 1000 multiplied by 30 percentage, that is 300. That is the depreciation. And when it is no pro rata, we'll be applying 30 percentage directly to the full book value at the start of the year. So I've said that as no pro rata, and let me compute the depreciation. And in the depreciation board, we'll be able to see the we have applied the 300 to our book value, and 1000 minus 300, we have got the depreciation value as 700. And next we'll be calculating the depreciation for the remaining book value. So the book value is 700. So we'll be that is here depreciation for the we'll be taking the 30 percentage for 700, that is 210. So the next year's depreciation is 210, and the cumulative depreciation is 300 plus 210, that is 510. And we'll be reducing 210 from the book value, current book value, which is 700, and we get the next value 490. And then we'll be calculating the depreciation as the 30 percentage of this value, and that is 163. And we'll be reducing this 163 from 490, and we get 326. So this is how we'll be calculating the depreciation for the declining. And similarly, if you are going to set it as constant period, we can set the pro rata date, and when we compute the depreciation, we get the depreciation board. So the 30 percentage of it won't be considered as a no pro rata. That is, for constant periods, the depreciation will be taken only for the part where we have used. That is, we have set the data, so pro rata data is April 24th. So it will be taken from that day onwards. So it won't take the complete 30 percentage. So for the depreciation, we have got depreciation as 205.83. That is here, let me open the calculator. So here we'll be applying the 30 percentage to the book value. Then we'll adjust it based on how many days the asset was used in the first year. So let's calculate the depreciation, that is 1000 multiplied by 30 percentage, and you have to multiply it by the number of days that we have used, that is 251 divided by 365. And when we calculate this, we get the value as 206, approximately 206. And so here we have the depreciation. There's a small precise difference over here. So we have the depreciation as 205.83, and we'll be reducing that from the book value, that is 1000. And similarly, for the next year, we'll be calculating the depreciable value, that is we'll be taking for the remaining value, we'll be taking the 30 percentage of that value, and we'll get the next depreciable value. And like that, we'll be calculating the depreciation. And next, for the computation based on days per period, we'll be applying the declining percentage to the book value, but spread it proportionally across each day of usage. That is, let's say 1000 multiplied by 30 percentage, which is our declining, that is depreciation based on our declining method. And then the number of days multiplied by the total number of days, and we get the value as 206.30. And the depreciation, we can see our depreciation over here. So For based on days per period, it will be taking exactly the number of days that we'll be using. Not just a whole year, but exactly the number of days the asset has been used will be used for this. And next, we have the method declining, then straight line. So, it will calculate the depreciation using the declining method, and then it will also calculate the depreciation using the straight line for remaining life. That is, we'll be choosing the higher value at each point. That is what happens in this. We'll be starting with the declining balance, that is, we'll be applying the 30 percentage for our reducing book value, and at some point Odoo checks if the straight line depreciation is higher than the declining. So if yes, it switches to the straight line. So that is what happens in declining then straight line. So that is at each period Odoo will compare the declining as well as the straight line, and it will take the higher value. So in this case, we have the book value that is 1000 multiplied by 30 percentage. So let me compute the depreciation. So we have the 1000 multiplied by 30 percentage, which is 300. And for the straight line, okay, sorry, before that, I'll be explaining declining, then straight line with no pro rata first. And I'm going to compute the depreciation for that. So in this case, we can see that is the cost is 1000 and we have the decline set at 30 percentage for 5 years. So it will check the decline, that is 1000 multiplied by 30 percentage, which is 300, and for the straight line 1000 multiplied by the remaining years, that is 5 years, which is 300. So it will take 200. So it will take the higher value, that is for declining 300. So the in the depreciation we will be able to view that the depreciation is set to 300, and for the second year it will be calculating the declining depreciation for the depreciable value 700 over here. So 700 multiplied by the 30 percentage, it gives us 210. That is declining, and for the straight line, 700 multiplied by the remaining years, which is 4 years, it gives us 210. So it gives us 175. So with the declining, it is 210. So with the straight line, it is 175. So since declining is higher, we will be taking the declining factor. That is 210, and the depreciable value becomes 490. And again, we will be checking the declining for 490. That is 490 multiplied by 30 percentage, which is 147. 490 multiplied by the remaining years, and it gives us a value, and then after that, since it is higher, it will be calculated according to that. And next, let's change the computation to constant periods, and let me compute the depreciation. So here the first depreciation will be prorated. That is, it has a fixed count for the only for the remain. It has a fixed count, that is from only, it will be taken only from April 24th to December 31st, and for the remaining period it will have a fixed count. So for the year 1, we'll be taking the depreciation as 1000 multiplied by our depreciating factor, that is 30 percentage, multiplied by the remaining number of days, that is 251 divided by 365, and we get the depreciation as 205. In this case, we'll get the depreciation as 205, and in this case also we'll be calculating the straight line method also, and we'll be taking the higher value in this case. Since it is declining, then straight line. And for all the remaining years, it will take the same value, that is in constant period we'll set a pro rata date, and for the first year it will take only the number of days, and for all the other days the value will be set to same, and the depreciation will be calculated on this value, and it will also take the straight line value, and whichever is higher is taken into account, and the depreciation occurs based on that. That is, next we have case 3, which is our computation based on days per period. So for this, the depreciation is calculated daily. So it will be compared for every period, that is whether it is monthly or here we have given yearly. So it will be compared for every year. So the depreciation formula becomes book, that is our book value multiplied by 30 percentage into our number of days, total number of days in each period divided by total number of years in period, that is 365. So that's how our depreciation is calculated, and also it and also it will take our straight line and compares both of them, and it will be taking the the higher depreciation, and it will be the depreciation is done according to that value. So this is how we do the depreciation for our declining then straight line. That is first, it will take the declining, it will compare the declining and the straight lines value, and whichever is higher is taken into account and depreciation is calculated according to that. So this is how we'll be able to perform depreciation for our assets in Odoo. And let me explain the entry. So for that, I'm setting the method as straight line and the computation as constant period. So let's confirm the depreciation. So we have options to modify the depreciation and save it as a model or cancel the assets. So here in the depreciation, we can see the posted the entries over here. So it's not posted yet. So we have the entries that has been created. So here we can see the fixed asset account has been credited and the expense account has been debited. That is for the first depreciation, it has been, this is the entry that has been posted. And next for the 2027, we can see the depreciation that is posted. That is fixed asset account will be credited and the expense account is debited. And now getting back and to the reporting. Sorry, that is since we have not posted, so that is in the posted entries, these the entry that is created will be posted automatically at the end of our period, and then we'll be able to view the reporting. And also we have an option for asset automation, that is Odoo automatically creates and manages assets, that is directly from the vendor bills. That whenever we create a vendor bill, the asset management, that is we automatically creates an asset and we'll be able to manage that very easily. That is we do not have to manually create the asset, but instead it will be created from the vendor bill itself. That is in the journals, sorry, in the chart of accounts, we have the in the fixed asset and in the non-current asset types, we have an automation field. So let's get into the this, and we have a automation tab. So under here we have an option to automate the asset, that is know, create and draft and create and validate. So if we have enabled this, an asset will be automatically created whenever a vendor bill is created, and we'll be able to manage that very easily. So this is about the asset management and depreciation and the asset automation. And now let's see how can we manage the deferred expense and deferred entries in Odoo. I'm sorry, deferred revenues in Odoo. So in the configuration settings, we have the default accounts portion where we set the journal, and the journal that needs to be used for the deferred expense entries, and we can set the deferred expense account to which it should be posted. And we have two options to generate entries, that is on bill validation and manually and grouped. So on bill validation, the entries will be created when the bill has been validated itself, and if it is manually and grouped, we have to manually group the expense and generate entries from the reports. And then we have three options for based on, that is, deferred entries can be created based on days, months, and full months. So days means it will be the deferred entries will be generated for each day, and for months it will be generated for months, and for full months it will take into account the number of days for each month. And that is if we are starting in the mid of the month, even though we are starting in at the mid of the month, it will be taking full month itself, like that. And then for the deferred revenue entries also, we have the journal, the deferred revenue, that is current liability, has been added, and the generate entries. We have similar options for generate entries and based on for deferred revenues as well. That is in deferred expense. It is like in accounting, we don't usually record income or expense based on when the money is received or paid. You'll be recording it based on when it is actually earned or used. So, for that purposes, we are using this deferred revenue and deferred expense. So, that is whenever we are creating an expense, we are not immediately recognizing it as an expense. Instead, we'll be storing it as a liability, asset, and then on each month when we receive the service, it will be transferred, it will be converted into an expense. And for deferred revenue, we'll be considering it as a liability first, and it will be stored in a current liability account. And then once we have delivered the service, we'll be recognizing it as a income. So this is how we deal with the deferred expense and revenues. So let me go to the customer invoices, and let's say we sell a 1 year software subscription for $12,000, and the customer pays the full amount today itself. So I'm going to create an invoice, and I'm going to add the customer open wood, and I'm going to sell the product software subscription. Software. So we do not have a product, so I'm going to create a product. So let me click on create and edit, and let the price be 12,000, and it is a service product. Saving it. So we have I've added the product, and let the quantity be. So to make it as a deferred revenue, I'm going to enable the I'm going to add the start date and end date also. So we have to provide the start date and end date for which we are going to provide the service to the customer. So let the start date be April 1st and the end date be July 31st. So we are going to provide the service for the customer for these many months, and I'm going to confirm this. So once we confirm this, you'll be able to see that a deferred entry smart tab has appeared. So over here, we'll be able to view the split of the deferred entries that have been created. So here we can see that the product sales account has been debited over here, since it is not considered an income right away, and it is considered as a liability first. So that is when we this is used when we that is a deferred revenue is used when we receive income in advance, but we cannot recognize it fully as revenue immediately. So in this example, we have created an invoice with a total amount of 12,000, and instead of recognizing the full amount at once, Odoo spreads it across multiple months that we have given as start and end date. So what is actually happening here is that on April 24th, the full amount is initially recorded, and the we can see the income account, that is our revenue account, is debited. The our income account product sales has been debited with that amount, and a current liability account is credited with that amount. So it means that our amount is treated as an sorry unearned revenue here, because the service or the product is not fully delivered yet. And for the monthly recognitions afterwards, for every month, that is from April to July, we can see that the product sales for each month, when the at the month end, the income account is credited, and the liability account has been debited. That is, it is gradually recognizing the revenue each month uh, once the product is delivered to the customer. That is how it is gradually recognizing, and we can see that here the full amount is treated as a liability first, and then month by month it is moved to the income. So each entry represents a portion of revenue that is being earned. So this is how we can we can create the deferred revenues. And also, when we go to the vendors and bills to create to show the deferred expense, I'm going to add the vendor Abigail Peterson, and I'm going to add the same software subscription product, and let the quantity be 1 and let the price be 12,000 it says. And I'm going to set the start date and end date similarly, that is April 1st to July 31st. So I'm going to confirm the bill. So we can see that when we have confirmed the bill, we have the deferred entries that is created. So here we can see that this is the complete opposite of deferred revenue. That is, we have already paid or recorded an expense, but we should not recognize the full amount immediately, because the benefit is distributed or spread over the multiple period. So here on April 24, the total amount of 12,000 is recorded. That is, the expense account has been credited with the amount, and the current account, the amount is moved to a current asset account. So here this means that the expense is treated as a prepaid expense and not fully consumed yet. And after that, we have the monthly recognition for every month from April until July. The system creates entries like the expense will be debited and the current asset will be credited with the same amount. So this is gradually recognizing the expense. So that is, first the amount is recorded as a prepaid asset, then month by month it is moved to expense. That is, each entry represents a portion of expense that is being used. And also here we can see that the expenses are recorded, it makes sure that the expenses are recorded in the current accounting period. So also with this deferred revenue, we can make sure that instead of recording the full $12,000 expense in 1 month, Odoo spreads it as 3,000 per month based on the actual usage. So this is how we can make use of the deferred expense and deferred revenues. And then in Odoo 19 has introduced a new menu called the review menu. So let's discuss the topics inside that menu. So first we have the journal items. So journal items are the each line inside a journal entry. So we'll be able to view each of the line that has been added or that has been created in a journal entry. So we'll be able to view the account that is affected and the debit, the credit and all inside the journal item. Then we have the journal audit. That is, journal audits are used to provide an overview of all the journal entries recorded during a selected period. So it helps accountants review the transactions by organizing them according to different journals, such as the sales, purchase, bank, miscellaneous operation, cash, point of sale, inventory valuation, and all. So here, under each journal, we'll be able to view its journal entries, and we'll be able to understand the complete, that is, we'll be able to understand it properly with using the journal audits. So we can also apply multiple filters over here, and it also displays certain journal code, and along with the total debit and credit. And we can also view the balance amount, which allows us to quickly verify our financial activities within each journal. And it also provides global tax summary also, that is, we can also have the global tax summary, and it also shows the applied tax, including the base amount, tax amount, due amount, and all. So it helps our accountants review tax calculations and ensure the accuracy of financial records. And next, under the review menu, we have the working files. So the working files, it is used to help the accountants organize and manage the task related to financial audits and reviews. So it provides a structured environment where users can track different accounting checks, that need to be reviewed during an audit cycle. So we can create a new audit over here, and we can provide the dates, the start date and end date until which we need to create the audit for. And we can also set the cycles that needed to be added. And after that, when we click on generate run, we'll be able to view the audit records with in progress of, like, whether it needs to be reviewed, or whether we have several status such as to review, reviewed, supervised, anomaly, and all. So, it with this, users can track different accounting checks that needs to be reviewed during the audit cycle. So here we have multiple. We will be able to view the under fixed assets. We can view the different audits that needs to be reviewed, and under the inventory, operating expenses, and all. We'll be able to view various review checkpoints, as I have already said, and it is grouped under the different categories. And here, each item includes a brief description which explains what needs to be verified, such as reviewing meal or expense adjustment and all. And like VAT entries, we can compare the operating expenses or validating aged payables and all. And the tasks that require attention are marked with a to review status, which helps users focus on the areas that still needs verification. And then we have the inventory valuation report. So this is the inventory valuation report. So in Odoo, we have in Odoo 19 we have two methods, such as the perpetual inventory valuation and periodic inventory valuation. So according to the perpetual or periodic inventory valuations happening in Odoo, we'll be able to view the report over here. So we can understand the stock movements, the initial balance, the ending stock, and all. So mm we have the we have three sections in this report, such as the initial balance, which represents the opening inventory value at the beginning of the reporting period. That is, this value is carried forward from the previous accounting period, and it also reflects the amount recorded in the stock valuation account. Then we have the stock variation. That is, all the transactions currently going on will be stored under the stock variation. And then we have the ending stock. That is, it represents the total inventory value that is remaining in the end of the reporting period. So the ending stock is calculated as initial balance plus stock increases minus stock decreases. So this value represents the inventory currently available in the warehouse. So this is the value that is currently available. And let's see in detail how inventory valuation report works. So under the configuration, And under the configuration, we have the product categories, and in the product category we'll be able to view the inventory valuation over here. So we have two types of inventory valuation, that is periodic valuation, that is at closing, and then we have the perpetual valuation at invoicing. So basically periodic at closing works as a manual inventory valuation, and perpetual at invoicing works as a automatic inventory valuation. So over here, let's first set it as periodic at closing. So we have the category clothes. Under the category clothes, I have set the inventory valuation as periodic at closing. And I'm going to save those, and under the customers and products and products, I'm going to create a new product, designer shirt. And I'm going to add the category clothes. So let the sales price be 100 and let the cost price be $50. And I need to track the inventory for the product. So we have created a product over here. Now getting back to the getting back. Let's go to the review and inventory valuation. Over here, for now we have in the stock variation, we have expenses credit on the credit side and stock valuation on the debit side. So I'm going to generate entry. So we have the entry over here, and I'm going to post this for now, just for better understanding when we are creating new entries. So over here we can view that in the stock variation, now we have the value is empty. So now getting back to the purchase module, and I'm going to create a new purchase order. So I'm going to add the product shirt. Our product is designer shirt, and I'm going to set the quantity 5. Okay, I'm confirming the order and receiving the products. So the products have been received, and getting back into the inventory module, accounting module and inventory valuation, we can see that when the product has been received, the expense account has been credited with the $250, and the stock valuation account has been debited with the $250. Uh, this is the entry that has been created for the purchase I have created, and now it is recorded in the stock variation account. That is the stock variation. In the stock variation account, we have $250. The stock variation acts as a temporary account. So since we have set the inventory valuation as periodic at closing, it won't automatically generate the entry when the bill or the invoice are created. That is, here we have received a purchase order, and if the inventory valuation is set as automatic, when we are creating a invoice or bill for the purchase or the receipt or the delivery, the entries will be automatically created. But since the inventory valuation has been set as periodic at invoicing, only when we generate the entry manually, the entries will be created. That is, it will move to the ending stock. That is, whenever the products are received, basically the inventory value increases, and we get a entry such as the stock valuation account will be debited and the stock variation account will be credited. So the stock variation account is credited to temporarily record the increase in our inventory value. So here at this stage, we can see the stock variation section in the inventory valuation report. It reflects the transaction value, and the ending stock value increases according to the value of the received product. And Now let's click on generate entry. I mean, let's go back to the vendors and the bills, and let me create the bill for the bill for that receipt. So let me add the purchase reference, and we have the bill. So I'm going to confirm the bill. So we can see that even though the bill has been confirmed, the value has not been transferred to our ending stock. That is in periodic valuation, the entries created from the stock movements remain temporary until they are finalized. And the accountant must click the generate entry button over here to uh, to generate the entry and post. So here let's click on generate entry, and we have the entry over here. So from the expense account, we can see the expense account is credited and the stock valuation account will be debited. So the stock variation, so when we are generating the entry, the stock variation account will be cleared, and the temporary balances created by the stock movements are also removed, and the inventory accounting for that period will be finalized. So let's just pause this, and getting back to the valuation report, we can see that the stock variation report has been cleared. And now let's get back to the configuration and the product categories, and in the clothes category. I'm going to set the inventory. I'm going to change the inventory valuation to perpetual. And getting back to the purchase and creating a new purchase order for the same product. I need 10 products. And I'm going to confirm the order. Receive the products as well. So as said, when we are receiving the product, the stock valuation account will be debited and the stock variation account is credited. So getting back to the accounting and inventory valuation report, we can see we'll be able to see the stock variation for 500 and the expenses credited for 500 and stock valuation is credited for debited for 500. And now let me go to the vendors and bills and create a new bill. I'm adding the purchase order and confirm. So here I've created the bill for that receipt, and when we go to the inventory valuation, we can see that the stock variation account has been cleared. So since it is a perpetual inventory valuation, the accounting is handled automatically in real time, and the accounting entries are posted automatically when the financial documents related to the purchase or sales are created. So this is how we manage our inventory valuation, and we'll be able to view the pending stock variations and all from the stock valuation report in the accounting. And the next in the review, we have the depreciation schedule. So we had created an asset just now, so I'm changing the month to April. So yeah, since we have not posted, the entries have not been posted for the asset, there is no report to show over here. So the depreciation schedule shows our assets depreciation according to the depreciation that is happening for our assets. And next under the review, we have the loans analysis. So in the loans analysis, we have we'll be able to create loans in our accounting, and its complete analysis for the principal, the interest amount, the payment and all. We'll be able to view our loans analysis based on that for years. And next we have the currency report, that is unrealized currency gain or losses. That is this report, it helps our companies to evaluate the effect of the exchange rate fluctuations on our transactions. So, whenever our transactions are recorded in the foreign currencies, we'll be able to record its record its exchange rates and all from here. So, identifies the differences, that is differences between the value of the foreign currency transactions at the time they were recorded and they value based on the current exchange rate. So we have multiple filters that can be applied, and then we have the deferred revenues. So in the deferred revenues, so I've set the month as April, and we'll be able to view the deferred revenues. That is, we have just created a deferred revenue, and we have the total amount as 12,000. And for the April, we have recognized the 3,000. I mean, for April, we have 3,000 amount, and we have recognized 3,000. And later, that is to be recognized, we have 9,000. And similarly, for deferred expenses, I'm going to change the months to April. We have a similar, we have 12,000 as total, and for April, we have 3,000, and we have recognized 3,000, and later, we have 9,000 that is to be recognized. And next, we have the audit trial. So, with the audit trial report, we get a detailed record of the changes made to our financial entries in our system. So it really helps us to track the modifications to the accounting data and maintain transparency in our financial operations. So we can review the history of the updates that has been made to our accounting records, and it will also display the information such as the date of the change, the user who performed the action, the related journal entries, and all. So, this is the review menu under the accounting. So, that's all for today's webinar in Odoo 19 accounting. So, if you have any more queries or if you need any assistance, please feel free to contact us. So, for more clarification, you can contact us at odoo@cybrosys.info. And thank you for watching.